Afternoon. How are you all doing? Afternoon, Monkey, Peter, Evil, It's Time, Mark, Nav, Kennelly, Jux, Agosa, Gina, how are we doing? Happy last day of the month. Possibly some big movement this afternoon. We'll see what happens. Last day of the month, typically they start to unwind positions, but it's not end of quarter, so may or may not move. We'll have to wait and see. So today we're looking at the CAD for GDP. We've got the unemployment cost index coming out, which I've never really paid much attention to, but it is red news. So it may get a bit of a kick for the US. But mainly we're looking at the GDP for the CAD to see how that's doing. Not a big mover at the moment, GDP, mainly about interest rates and inflation, insurance. But we'll see what happens. It may get a move off of that. So we'll watch that happening in the next 10 minutes. And then obviously we'll look ahead to US consumer confidence this afternoon. And the main news today is the unemployment rate, which comes out before midnight for the New Zealand dollar. And that is forecast to be going up, which is going to be potentially negative New Zealand and negative Australia as well. So that's the news today. We've had the retail sales for the Aussie this morning, which came out negative. We got a big drop on the Aussie today. So as you can see, the ADRs here, all Aussie based at the moment. So Euro odd, Euro New Zealand, Pound odd, Pound New Zealand, and New Zealand US. So I got stuff all over the place on my desktop. I'll just get rid of some of that. So yeah, so fairly big drop on the Aussie this morning. Not massive, little bit of movement. Just tapped into ADR there on the Aussie US. Bounced off. Euro odd. We are sitting up at ADR 125. Euro New Zealand, we're sitting up at ADR 125 as well. So bit of negative movement, but all it's really done is just pull itself back inside these hideous ranges that we're in. So again, just movement, but no direction. So same as usual. Afternoon, Brian. So yeah, rubbish movement at the minute. I've turned the EA back on my VPS today. And I've dropped the number of pairs that I'm trading at the moment just because it's too expensive with swaps at the minute to get into everything. So I've dropped the number of pairs that I'm in just so that I can focus more on what's kind of moving intraday, really, at the moment. I've dumped the yen for the moment, as we know. And I've also dumped the Swissy for the moment as well. Not permanently, but the Swiss franc is very erratic at the minute, and I'm just concerned about something kicking off somewhere. So as you can see, it's either going nowhere and sideways, the Swiss, because they've dropped the interest rates first. We had that little blip, but it hasn't done anything since that blip. It's pulled back. So we haven't really gone anywhere for weeks too much on the Swissy. It's already had a rally there. But I'm just concerned about the Swiss and these spiky movements on safe haven runs in case anything kicks off. So there's enough to trade without taking the Swiss and the yen at the minute. So I've just dropped the pair numbers down, basically. See New Zealand dollar Swiss just sideways. We've been sideways all year. Really, it is moving, but not enough. So I've decided to drop it for the moment, but we'll wait and see what happens with it. It's just too contracted. US dollar yen. So we looked yesterday at the intervention. We had news this morning that the intervention was an intervention, which is unusual. So this morning we had Bank of Japan data suggests Japan may have spent 5.5 to 5.26 trillion yen Shouldn't that be 5.26 to 5.5 trillion yen for the intervention? Notice the word intervention. Everybody that's telling me this isn't an intervention, they're using the word intervention. May not be, but that's what the market uses, so I'm going to use it. All the arguers out there who say it's not an intervention. Intervention, oh look, there's that word again. Amounted to 0 yen from March. Don't know what that means, Ministry of Finance from Japan. Yeah, so obviously Bank of Japan has done this move, although obviously they denied it as soon as it happened. But looking back at the previous intervention moves that we've had, we tend to get the intervention, which tends to come in multiple waves. Whether that is the second wave or whether it's a market reaction to the initial wave, we don't know. We never will. But that movement is very typical of intervention. We stop, we sideways for a while, can be weeks, and then the drop typically will continue from the back of that. But we're in a very, very different economic situation at the moment, so it's very difficult to tell what's going to happen with this. So this support rectangle here, which is basically that second hour push, if the market is going to retain this intervention move and stay in line with it, we would expect this to hold this level, somewhere around this level. It may poke up a little bit more, but this move here is where the market has either been blindsided and put offside on the trade they had and flipped short, because the market's either long or short. They know not, flat in markets with institutions, you are biased one way or the other. So they will have flipped short on that or have had no choice much. So they'll be looking to withdraw or recoup the losses in an accumulation before they move the market. So this is a really good area to short from if you've got a bias that they're going to stay in line with the yen power that we've just seen. If not, obviously we could move back up into the highs. But 160 is the level we know now. Same as 150 was the level before. We did it twice. We could well do it again. We'll see. But I'm not getting in the yen at the minute. I'm just going to leave it to settle down and figure out what the hell it wants to do. Afternoon, AZ, Lippy, Ismet, Amy, XR at Dick.news. So today so far has all been about the Aussie and the New Zealand dollar based off of that news. So the ADRs today, we've got 5 minutes of the news. Aussie US has just bounced off of ADR, not really gone anywhere. Euro odd is sitting up at 125, been consolidating for the last 4 hours. Euro New Zealand sitting up there, consolidating as well. So lovely big wicks on this. Looks like a lovely little intraday short if you want to take it. Pull back into propulsion. This is obviously a short at the moment, the euro as well. So good opportunity for shorts. We've got the pound odd obviously up there as well at the moment, which is just double topped. So again, if we're going to retain this range, good area to short from. And pound New Zealand, that's filled the propulsion gap. So we've got lower highs, lower lows currently going in. Not sure about pound directional bias at the moment. We need some more news from Bailey on that. New Zealand US, not really gone anywhere. We've hit the lows, and again we're range bound, so we're slightly grinding up actually on this one. So good level for a long potentially, but you're going against the US dollar, and we've got news this afternoon. So the US could go anywhere at the moment, but the US is going nowhere much at the moment because we have no idea what the Fed are up to. As you can see, they're clueless, we're clueless. Bank of Japan, this is not an intervention. Squirrel. Don't get that one. Squirrel. Afternoon, George. I don't understand why they didn't intervene at 150. No, neither do I. That's why I made a massive loss on it. That's what they've always done in the past. But, levels are levels. This is the thing. Levels change. We've used 150 before. Twice. We've used 145 as well. Now we're using 160. Just the way it is. As much as they scream and shout, we've been through it, for weeks, but as much as they scream and shout, at the end of the day, it's down to them, their economics, and their monetary policy as to when they pull that trigger. There is no line in the sand that there's always a line in the sand it becomes uncomfortable at. The same way as we as position traders have a percentage of drawdown we become uncomfortable at. Whether you decide to let that uncomfortable level get more uncomfortable or you do something about it is a personal choice. It's no different to the Bank of Japan. They will have levels set that they will become uncomfortable and very uncomfortable at. When they pull the trigger will depend on everything else that's going on around the world. So, you can't pick a level. They've always said, we do not have a level in mind. However, it's always a round number. Yeah. As I said, when we broke the 155, 160 is your next stop. Yeah. They don't talk in 156, 974 is where we're going to do it. They talk in round numbers. Banks and institutions work in quarters, halves, and round numbers. So that's basically what we got. We got the 160. 165 is next stop. If it was to break that level, but you can't ever tell, unfortunately, where it's going to be. Afternoon, Crumb. Afternoon, David. Must be a US thing. You yell squirrel when you want someone to look the other way. Yeah, well, that's from... There's a cartoon where they yell squirrel all the time. Can't remember what it is, but the dog, I think it's a dog in it, suddenly goes like that every time they yell squirrel. I know what it is. It's Up, with the old guy in the house that attaches balloons to the top of his house and drifts away. The dog in that, who can speak somehow, they shout squirrel at him. There you go. If you've got kids, you will have watched Up many times in the past. Right. Squirrel. That's it. Okay, so let's watch Euro CAD. Big sell-off coming on at the moment ahead of the news. So possibly Canadian dollar strength coming in ahead of the news. Yeah, there is loads of Canadian dollar strength coming in ahead of the news. Christ, look at the spread on that. 10 pip spread. There we go. US dollar Swiss ADR exceeded. There we go. The news is out. Not a lot of movement. Charts seem to have frozen. There we go. So this is bearish Canadian dollar. So GDP numbers look like they are down. 0.2 on a forecast of 0.3 coming from a 0.5. So they were forecasting a drop. We got a larger drop than expected. Unemployment cost index is up. So cost of employment is up. Again, not good for inflation. Just Jesus. Everything is going against the US for inflation at the moment. It's awful. But hey, what the hell? Can't do anything about it. So yeah, that is negative Canadian. Whether we get a lot of movement out of it, we will have a look and see. I'll run through all the pairs in a minute anyway. Doesn't seem that dramatic at the minute. Nothing much. Afternoon, Virginia. Have you ever heard of portable Wi-Fi, of a portable Wi-Fi device? You're in a phone? I don't know what you mean, portable Wi-Fi device. It's a mobile phone, isn't it? Is that a trick question? I haven't, no, but I have a portable Wi-Fi device on my desk. I'm all for you creating a paid stream. I don't want to do a paid stream. UMTS router? Don't know what you're talking about. Why do you need one anyway? Portable Wi-Fi is mobile, surely, it's cellular. So if you're talking about needing a Wi-Fi device when you're on the move, it's a mobile phone. If I'm out with my Microsoft Surface, I just hotspot my phone to my laptop and I can trade if there's no Wi-Fi around. There's nowhere in the UK anyway that I go that there isn't Wi-Fi. Everywhere's got Wi-Fi. I went to the doctor's with my wife the other day and they've got free Wi-Fi there. It's just this. It's everywhere. You don't need anything portable. Anyway, yeah, I don't really want to create a paid stream, to be honest, because it's just defeats the object of me doing this for free. Otherwise, I become the Lamborghini crowd, don't I? If you pay somebody for a stream, you're paying basically for signals. And I just can't bear signals. I hate people following my trades. It's just not what I'm about, basically. You should trade yourself. You can't make money out. Somebody else asked me the other day in Telegram, have you thought about setting up a signal service? I've been asked it many, many times. I have had signal services. I've set up signal services from the EAs. Yeah. All people do is follow it. They follow the signal. Yeah. If I suddenly stop that signal, you're bankrupt. Yeah. You've got to learn to do this. If you want to make money trading, you have to learn how to do it. You can't follow signals. Also, if I go, great, I'm just going to hit US dollar yen, 10% risk long, bang. So are you. Trust me enough to say that I won't blow your account just because I'm pissed off? Had a bad day? Can't be asked? For fun? Yeah? Signal services are suicide. And you will never, ever, ever get the same entries and exit as anybody that provides a signal. There's a delay. There's a difference in spread. There's a difference in broker. There's a difference in swaps. There's a difference in everything. Yeah? So you'll be in a long trade with a stop loss. That person won't get stopped out. You will, because your broker spreads you. Yeah, you'll never get the same results, and all results are random. Yeah, every time you press the button, it's going to go up or go down at random. So it's all about risk control and risk management. And, you know, you're trusting that person, and 90% of the time it's an EA running it, which they bought off of some curve fit person on MQ5 marketplace, and it's a load of rubbish. So just don't do it. Learn, come into my work office 2 days a week and having issues connecting to their Wi-Fi. You can trade using your hotspot. I don't know, David. I can't help you with that one. Your broker spreads you. Interesting way to put it. Well, that is what it has. The market has no spread. Yeah. The market quotes a price. Yeah. Your broker adds that spread. There is no spread in the market. The market is the market. Yeah. The Chicago Mercantile Exchange in futures supply a spread, which is the difference between the bid and the ask, which is controlled by the traders. And it's always one tick. Every now and again, you might get a 2-tick spread on the CME. That's it. Yeah. With CFDs in Forex, there is a quoted price by a market participant, which is either a dark pool or a broker. Your broker gets that price and adds a spread to it. They control the spread. So when my stop loss is here, the market pushes to here. If they want to spread me out and take my stop and then come back down again, they will. And they do all the time. You know that if you've ever traded. That's what they do. Yeah. So 90% of signal services are run on demo accounts. Demo accounts do not have real-time spreads. Yeah. Your demo account is manufactured to be a 2-pip spread. And regardless of what happens in the market, we'll give you 2 pips because we want to make it look as fantastic as possible. We don't want you to have any problems trading. We want all your systems and strategies to work exactly the same as in the backtester. Stick it on a live account. Boom. Now suddenly your spreads are 10 times bigger and your strategy's not working. Weird. It's your broker. Their job is to take your money. If they don't take your money, they don't get paid. Because every time you press the button, they make a swap, a spread, and a commission. Their job is to get you to press these two buttons over here. And that's how they make money. Yeah? It's not in their interest to have your stop loss there, the market move to there, and then move away. It's in their interest to have your stop loss placed. Then you press the button again. They don't care what happens to your trade. It's irrelevant. What they care about is that button being pressed. That's why they spread you out. They've got software. I've talked about this in the past. I put a video up not long ago about the software they use. Yeah, the software they use in brokerages. Ask Tom Hurgard this if anybody is in Tom's group. He used to be a broker. Yeah, they got software which has lines on it and monetary values attached to each line, which says if price gets to here and you spread it to there, you earn that. If you spread it to there, you earn that. If you spread it to there, you earn that. At end of day, when we get to this line, if you gap the market down and spread like that, you will earn X. If you spread the market like that, you will earn Y. That's what their software does. And it's fully automated as well. They have a button they can press, or they just set it up to go, grab me X pips at the swap. Look at any New Zealand dollar pair. Well, look at the pound CAD right now, look. Yeah. Market closed there. 5 minutes later, it opened down there. No, it didn't. The market closed there. 5 minutes later, it opened there. The broker opened down there. And everybody down here that had a stop loss lost their money. Market never got there. How many times have you seen me moan about this? I mean, it's just what they do. They spread you. What their main tool is for making money. If you want to be a brokerage, that's the job to be in this industry, I tell you. Euro New Zealand 150 ADR. New Zealand dollar's rallying, or the New Zealand New Zealand dollar is dropping, or the euro is rallying. New Zealand dollar's dropping. Aussie will be dropping with it, I should imagine, as well. Oh, no, it's just New Zealand. So a little bit of weakness coming into New Zealand, not a lot. What was this US dollar strength? Wow, massive US dollar move. This is not a US dollar strength coming through. Okay, so we are breaking above that pullback from the intervention. More danger for the Japanese. Freedom means not having to rely on anyone but yourself. Exactly. It's the old, give a man a fish, he'll feed himself for a day. Teach him how to fish, he'll feed himself for the rest of his life. I'm not religious. That one just stuck me with me. Afternoon, Champagne. Afternoon, Steve. Right, so ADRs today, there's quite a lot of movement going on. Euro New Zealand really rallying at the moment. We're coming up into the highs of that range. So 150 ADR, potential short opportunity. I'll have a go at that. So short one, Euro New Zealand. Not that I'm telling you what I'm doing. Said I wasn't going to, but anyway. Going short one, it's 150 ADR. Euro odd also extended. So nice potential short opportunity on Euro New Zealand there. That's because of an ADR, yeah. So it looks like a good little short. I want to be short Euro at the moment because of what's happening with the interest rates in June. So any kind of pullback that I'm spotting on any euro pairs at the moment, RSI extensions to the upside, ADR hits, which this is obviously 150 ADR, going for shorts. There's no reversal on this yet, so obviously this is just a speculative trade. Ideally, you'd wait for a pullback, but 150 ADR, good spot to get in at. So ADRs today, that's all of those. RSIs, there's nothing to look at on the RSIs today. It is dead as a doornail on the hourlies, which it is so much of the time at the moment. I've moved my RSIs down to 70-30 now. So I'm going to start getting in on 70-30 RSI extensions because it's becoming more and more difficult to get in on higher RSIs at the moment because obviously, as you can see, The market is spending so much time just doing this. Even when we get big ADR hits like this is 150 ADR, we're not even getting to 70 extensions a lot of the time. We had one there, look, nice, quick, easy in and out. And I've noticed over the last few weeks, been struggling to get into trades because obviously we've not had any extensions. So one there, we had a 70 there. So both of those nice, easy, quick entry and exits. So I'm moving down to 70-30. In fact, I might just change that on there. Just at the moment, basically, just to try and get into the small positions because it's difficult at the minute. So Euro New Zealand, nice looking short. I'm going to run through all the pairs basically at the moment, just to see what's going on everywhere because yesterday, obviously, I did run through all the pairs as well. Everything seems to have undone itself, but there's nothing else to look at today because obviously the RSIs are flat. You got 2 RSI extensions and that's it. So this week we've got big news coming up overnight with the unemployment rates, and then obviously we've got FOMC tomorrow and non-farm payroll on Friday. So overnight tonight, tomorrow night, and Friday, 3 major potential moving events. One of them New Zealand and Aussie, and the other one US dollar. And obviously US dollar again. So we've also got Swiss CPI coming up on Thursday, which is potentially going to be fairly big, but I've taken that out of my portfolio just for the time being because there's too much tension going on and I do not want to get caught in another squeeze on the Swiss franc because the Middle East blows up. So taking that out of the equation for the minute as well. So I'll run through all the pairs. If there's anything specific you want to look at, let me know. It finally is down to 70-30 RSI, so the markets will start to move massively. Yeah, you can bet your bottom dollar. But I have reduced my pairs list right down. So I've got rid of most of the confluence pairs. So I'll tell you what I'm in. From a pairs list perspective. Can't really see, can you? It's not going to help. So I'm in Aussie dollar CAD, Aussie US, Euro odd, Euro CAD, Euro pound, and Euro US, pound CAD, pound New Zealand, pound US dollar, New Zealand CAD, New Zealand US, and US dollar CAD. So that's all I'm trading at the moment. So the Aussie New Zealand I've removed at the moment. I'm still in the I'm still in Aussie New Zealand, and I'm still in US dollar Swiss at the moment. Those I haven't got out of because they haven't gone anywhere. But I won't be getting back into those. So Aussie New Zealand. That pair has caught me out on multiple squeezes. So, and I'm in one at the moment on it. I think when the interest rate differentials start to go, I think we'll probably get into a trend on that. So I'm just going to get out of that for the moment because obviously from a mean reversion perspective, that can be a bit squeezy. So Aussie dollar CAD and Aussie dollar US are the main 2 that I'm trading for the Australian dollar. New Zealand dollar CAD and New Zealand dollar US I'm also trading. So there is confluence between these. These 2 are going to move together. So when we get Aussie dollar news, we get New Zealand movement, etc., vice versa. But when the interest rate differentials start to kick in, these will start to move much more independently. I'm in Euro odd, but I'm not in pound odd, because Euro odd and pound odd move together. Euro New Zealand and pound New Zealand move together. So I'm taking Euro odd and pound New Zealand. So that gives me exposure on those 2. But it doesn't double up exposure with the Aussie, with the Euro odd and the pound odd. So, and the Euro New Zealand and the Pound New Zealand. Euro CAD, I'm trading, and the Euro US dollar. So one commodity pair, but obviously they have a slight confluence. Euro Pound is very low ADR at the moment. When the Euro and the Pound start to drop interest rates together, they should, well, the reason I'm using those is because they should start to drop interest rates together, which means that you should have a good push when the Euro drops, a good push up when the Pound drops, Euro drop, Pound drop, Euro drop, Pound drop. So we should see good market structure on that when that starts to trend, if it starts to trend. If they both start to drop at the same time, we'll get a lot of that. Pound CAD. So there is slight confluence with the Pound CAD and the Euro CAD, and the Pound US and the Euro US. Obviously, these are the majors. So these two are going to move similarly against the US dollar, but obviously they will move independently with their own interest rates. And then the US dollar CAD. Yeah, so that's basically what I'm trading. So I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 pairs out of the 28. So dropped for the moment, all Swiss. And until we have an idea what is going on with the interest rates, how they're going to use interest rates to control inflation, whether they're going to use it, and whether this intervention holds, I'm just going to stay out of that, which probably won't be for more than a couple of months. But what I will do when I reintroduce these, I'm going to introduce one only. And I will diversify these two. So I might go US, I probably won't go US dollar yen actually. Probably go something like, in fact, Swiss yen wouldn't be a bad cross to introduce actually. Because that covers the two then, and I've only got single exposure. I just want to reduce exposure on these at the minute, just because I think you're going to get into trouble with them. So that's what I'm trading at the moment. I'm obviously have all pairs up because people are going to be trading all sorts of stuff. But that limits my exposure down across all of those. And I want to be able to just jump in on stuff as well, just using the trade buttons as and when. Why have I got the spinning blue wheel of death? Euro pound, we can look at that. ACNC, I thought it was ACDC. No. Euro pound. So very nice looking opportunity for a long at the moment, pushing up into that propulsion gap. Reversal alert just gone in. Nice RSI extension. So yeah, that's a good looking long. Didn't quite get down. Again, look, didn't get down to the 20 level. That 80 level, beautiful. 80-20 is still obviously my absolute favorite. We're just not getting anywhere near it at the moment. But so you got down to 75 RSI extension. So that would have been a nice entry if you took it. Reversal alert's gone in there. So yeah, beautiful. Looking for it to pull back on this leg. So you're looking at that leg coming down, pushing back up. 50% retracement takes you back into this propulsion gap here. So you got that nice double top in propulsion. So market basically accumulated, broke, retested and added twice to their shorts, pushed down. So when we get back to there, this is where they started shorting from. If they're still short on the pair, that's where they're likely add into their positions. So you should be safe getting back up into that area there. Looks good. Nice reversal alert, nice extension. You initially got extended on the RSI below the 75 level on that candle there. So if you'd have got in on the 75 extension with a 5-minute reversal or with a position trader EA and moving average cross, that's the heat you would have taken. So not much. Looks good for long. Afternoon, Paul. So we'll run through everything again quickly today. Aussie dollar CAD, obviously, we've just had the news for the Canadians, which is obviously negative or slightly negative, not very negative. So we've had a little bit of negative move on the Canadian. So Aussie dollar potentially got a chance to push back up into that propulsion. It's trending up at the moment, but obviously we just put in a lower high, looking for a lower low out of this propulsion move. They have added back in on this propulsion movelet. So that was the propulsion gap. That was your add. Added again, added again. So this looks like it's a good support at the moment. Whether it goes into a range, because obviously we've got this massive buy area here. So your battle is being fought between these two zones at the moment. So that's your range, which potentially could form. If it breaks out that high or backs out of that low, that's where it's obviously going to go. So at the moment, not really going anywhere. We're kind of stuck bang in the middle of that range battle. Aussie dollar Swiss, lovely high rejection, beautiful reversal alert and retest M pattern at the top there. So looking good for potentially shorts. If you're already in it, that didn't quite get the RSI extension, but you did get an RSI extension back up here. Nice divergence as well there. So definitely weakening currency. So looks good. But obviously the Swiss decided to drop their interest rates. Hence, we've had a rally. And obviously we've got the CPI coming out on Thursday. If that number comes out any lower than a 0.1, the Swiss are going to drop that interest rate super fast. So that will weaken the Swiss franc again, which means that will rally. So very difficult to pick a direction with the Swiss at the minute. Everything's very tricky at the minute because obviously with interest rates, we just don't know where they're going. But with the Swiss, we know they've already reduced. They didn't tell us they were going to reduce, which is what they always do. And there's a good chance that they're going to do it again very soon because if that, but that inflation number on Thursday will tell us, give us a clue. If that pops up to a 0.1 or higher, it means that the interest rate drop they had hasn't had a massive effect month on month, which is kind of what they want. They don't want it to drop too fast, but equally, if that comes down, they will need to drop that interest rate a lot faster because you do not want it spiraling down into negative areas. So, and as you can see, the Swiss at the moment, their inflation was never high. Their inflation never went above target. But their inflation at the moment is sitting at 1% and it's coming down at 0.2 increments. So they want that to tick up. You want to stick around about 2%. So that first drop that they had, first people to drop, that will come down quick. I wouldn't be surprised to see a 0.75 come off that. If that CPI number comes out, they'll drop that fast, which will devalue the Swiss. But the Swiss being a safe haven will only devalue for a short period of time because things like that happen where you get something kicking off and suddenly you find yourself 300 ADR in the hole. So again, dangerous at the minute to trade with the Swissy. All yens, yes, is as good as mine. So we've had the intervention move. We're holding the intervention move at the moment. So looking at previous interventions, all we have ever seen is an accumulation drop after them. We don't know what's going to happen this time, but if you're going on historical pasts, that's what's coming. So you want to be looking for long positions on your yens. So short everything yen. So yen should be powering up, which means everything should drop against it. But again, we don't know what's happening with interest rates with the US. Everybody independently is going to be starting to manage their interest rates now moving forward. So the Japanese, for the first time, have control of their own interest rates. We have no clue whether or not the Japanese yen will fall in line with the rest of the world and just start controlling its inflation with interest rates. So that intervention may well have stalled that rally against them at the moment. Whether it holds or not, we'll have to wait and see. But, you know, I can only go on what's happened in the past. And in the past, every time that's happened, this thing drops for months. So, who knows? Aussie US 125 ADR. That one in a sec. So, yeah, all yen pairs. I won't go through all the yens individually, but they're all the same. Yeah, intervention, pause. Yeah. So you're either going to play the continuation of it or you're not. If you're not going to play the continuation of it, I mean, whether it breaks that high or not, I don't know. But it's going to take, you know, look at normal market movement. It's going to take you a week to get back there if market conditions are normal. Pound New Zealand, 125 ADR. Lots of ADRs going off all over the place at the moment. So, yeah, Swiss yen, same thing. We're holding. That's a bullish wedge pattern. But, you know, after a move like that, it's not really, is it? Euro yen, same thing. Pound yen, same thing. New Zealand yen, yeah, all the same. So, and US dollar yen, obviously, we've just had news. That's an ADR hit now. So that's a reversal alert just going in there now. So that structure is now broken back to the upside, but this is only a news spike. So we've got more news coming at 3 o'clock. So, you know, the news this afternoon, when we get the consumer confidence figure, could well flip that move we just got straight on its head. S&P composite HPI figures is about to come out as well. That might shift it a little. We'll see. So Aussie US, we've just had an ADR hit 125 on that one. So again, this is this US dollar strength we've got coming through. Reversal alert is just about to kick in 1 minute. So you're going to get a short signal on that on the hourly. So if this is going to continue, as you can see, the propulsion move, they've added back into the propulsion move, and we've just had positive news. Nice and helpful. So again, market structure shifting back to the downside. So you're looking for a pullback and retest and drop. That area of propulsion is the next buy area to the downside. So if we get, I mean, if we did get down to 175, 200 ADR today, good looking long. That will get there, but might do. You never know. We might have negative, positive news come out in a minute with the S&P numbers, and we might get consumer confidence coming out positive later, which will bring this down here, in which case you're going to find some resistance down there, support. So Aussie US coming down nicely. So you've got an ADR reversal opportunity, so you can drop down M5. You want to take a scalp, wait for some strength to come back in, and then play it back up into this area, which we've broken through. Also, watch that for a double top. Swiss franc. So CAD Swiss, obviously, if you ignore this intervention, if you ignore this safe haven run that we had there and sort of get rid of that, you can see what the market structure is doing at the moment. Absolutely nothing. We're totally sideways. A little bit of a rally, totally sideways. We're still totally sideways. It's not going anywhere. So market is really contracted at the moment on the CAD Swiss. There's no directional bias. There's nowhere to go. So we're sitting here waiting for some kind of breakout. But, you know, breakouts at the moment, when they happen, are so unbelievably weak. Nothing's getting into trends at all at the minute because we're just waiting to see what's happening with inflation everywhere. So it's just a case of sitting there and waiting. Waiting for stuff to do something. But anyway. Afternoon, Franco. Swiss yen, both low interest rates. Yeah. They are. So obviously the yen has always been negative. So, you know, this is the problem with the yen at the moment. From a general market perspective, we've absolutely no experience doing this for the last 2 decades. We haven't had this for 20 years, so we don't know what to do with it. This is not what the Japanese use for anything. They've never used interest rates. So, yes, it's low, which means that the differentials, as we know, with swap costs are very much still the case of you want to be long in everything against the yen from a fundamental perspective. But how the market is going to perceive this. This is a major shift. So what we've got going on here is something we haven't had for a long time. Yeah. So with all these yen pairs, go back to Friday. So with all these yen pairs, look at the interest rates. Going back to 2000 and, I mean, we only go back to 2016. Yeah. It's negative 0.1. And it's been like that for, you know, more than a decade. We've had that no interest rates and no changes in interest rates. The Japanese have never used interest rates. Yeah. So the situation that we're in now is very similar to what happened with the Swiss franc cap removal back in 2014. Yeah. They suddenly went, you know what? We're not going to peg ourselves anymore. We're going to be independent. Boom. The market collapsed. Brokers went bankrupt. Everything exploded. Since then, the Swiss franc has been traded completely differently. This is the first time the yen has approached 160, and it's the first time it's ever had its own control over its interest rates. What happens now, we don't know. We didn't know what was going to happen to the Swiss after the peg removal. Now we know. Yeah, because we got that experience and that hindsight, that back testing to be able to do. We haven't got any of that with the yen now. So although it's got low interest rates, which you would anticipate every other currency at the moment being bullish against it, because you do not want to put your money in the yen. You want to put it everywhere else because you'll make more out of it. Attracts investment, attracts everything. We haven't got any experience as to whether that is going to be the case. So this 1/560 intervention we've got is the first time we've had an intervention move after having our interest rates increased. Again, you've got no hindsight to go on, so we don't know what's going to happen with them. You would expect the market to do that. Same as with the Swiss, everything be bullish against the Swiss. And that typically is the case, and it will be the case if they continue to do that the market will push against it, but only short periods of time. Because as we know, the Swiss banking system is the largest, richest in the world, and everybody puts their money there whenever there's any problems. And also a lot of transactions go through the Swiss National Bank on their way to Europe. Yeah, a lot of corporations hold Swiss bank accounts. A lot of incredibly wealthy oligarchs and other wealthy people around the world own Swiss bank accounts. So there's a hell of a lot of money goes through the SNB, which is why you get these huge moves in it, which come seemingly out of nowhere, but it's just injections of cash. So we don't know what's going to happen with it. But yeah, all of them temperamental moving forward. Could do nothing. Yeah, the Swiss yen, as they both, you can see, yeah, there's very little movement in it because they've both got low interest rates. There's no advantage to either of these currencies at the moment. There's no advantage to having that over that or vice versa. Whichever one you put your money into, you're not going to make much money out of. So there's very low investment in it. As the other interest rates start to drop, these will start to become as attractive at some point. So it's not, if you're going to take on a yen pair, you're going to take it on because of volatility that will undo itself. Yeah. In times of no volatility, there won't be any trades in it, which is fine by me. But it's less likely to squeeze hard because there is no massive differential that would make it squeeze hard unless something changes. Yeah. And that's the one that you're going to find something changing with. We'll see. US dollar yen ADR. There we go. So if you hit that ADR level just to the upside. So are we going back to 160? Interesting times. Right, euros. So I'm bearish all euro pairs at the moment. This is a good example of euro, why I'm not trading both euro odd and euro New Zealand at the moment. Look. So very, very, very similar movement across the two. Bloody hell, that's gone to 175 already. So you get very similar movement between those two currencies because when the Aussie moves, the New Zealand moves. So if you're trading euro odd and euro New Zealand, you're just doubling your exposure basically on Europe against Australasia. So pick one or the other, but both very nicely extended to the upside. We've got an ADR hit to the upside on this one as well. Market structure obviously is bearish on this at the minute. It could put a deeper pullback in on this leg before it starts to move down again, which is fine. So Euro moving their interest rates down in June, ideally assuming the market is going to react as it should do to interest rate drops, we should see nothing but bearish movement. So Euro is a good short across the board at the moment on any kind of pullback you see to the upside. It's a good looking short. And it's the type of thing that when we start to get that movement, we will start to see that trend form in a very similar way to we saw it moving there. So, yeah, interest rate rise, interest rate drop. Yeah, so we should see this kind of trend form using 2472 on the way back down again. So short euro at the minute. So this is a good extension to be getting in on. It's approaching a 50% retracement. You're above a 38 retracement already. We've got this big propulsion move, which we've added to twice. So even if we're going to form a range here, that's where you're going to do it from. So good looking short opportunity euro odd. if you want to hold it and go for a new lower low, it's got a lot of potential, but those interest rates are not changing just yet. So wait and see. Euro CAD, again, ADR hit to the upside, RSI extension, good looking short, high, low, lower high, lower low, lower high. Looking for a lower low if we're going to continue the trend. Canadians obviously just had a little bit of bad news, which has obviously helped this spike up again, but overall bearish sentiment on the euro. We had the euro CPI estimates come out today as well, which I think were negative. Where was that? Earlier. 2.4 on a 2.4 year on year. Quarterly 0.3 on a 0.1. Oh no, it went up. Okay, so that's slightly bullish euro. Oh, that's GDP, sorry. There we are. Core CPI. Yeah, it did go up. So only 0.1 though, and it has come down. So we were 2.9. We were forecasting a 2.6. We got a 2.7. So it is still down on previous, but ever so it's a slight bounce. So still bearish. They're not going to change their mind on the interest rate decision based on that. So yeah, looks good for shorts. Euro CAD. Euro Swiss, again, the euro and the Swiss move together. So often you will get an awful lot of sideways movement on this one. It's never ever been a great thing to trade the euro Swiss, because you either get into a situation where it squeezes or it does nothing, which is very characteristic of it. It's a little bit like the euro pound in that respect. It can be quite hard to trade because the ADR is very tight and very low on it. There's not a lot of movement on it. So good looking short at the moment, but you're playing a short against a short come June. So next month, obviously May, then we've got June, then we're going into summer trading. Summer trading is going to be hell this year. There's no volume in the market now. We're 35% down on where we were last year. When we get to summer trading and it drops, this thing's not even going to move. So that'll be interesting. But anyway, euro, it depends on what the interest rates are doing, actually. It could be collapsing by then. But the euro is going to become a short in June, or on the approach to June. Don't forget the market moves 4 to 6 weeks before interest rates a lot of the time. So they price that move in. When they get that move, we wait to see what they say next, and then we continue it or we undo it, depending on what we get. So, yeah, good chance of that dropping. But obviously the Swiss franc potentially could drop their interest rates first, which will spike this temporarily. So we haven't got a CPI number coming. I don't, an interest rate number coming on the Swiss anytime soon. When are they forecast for the next one? July or August, possibly. No, June. Sorry. So the 20th of June is the next SMB rate. We've got obviously 2 CPI figures before that. So that will be critical, obviously, to what they do. But we're not forecast to change our rates until June. That doesn't mean that the Swiss won't do it, because the Swiss do what the hell they like. Pound odd 125 ADR. Euro pound, good looking short. So we will get a temporary move on this. ADR on this is terrible, 36 pips. Very, very, very tight pair. Does an awful lot of sideways movement. So at the moment, obviously, we've just A-shaped recovered over the last 2 weeks on that initial breakout, which failed. So we had that little bit of negative movement coming through on the pound, same time as we've got a little bit of positive movement on the euro. That has completely undone itself, even though we know that the interest rates are dropping. That's dropped very fast and hard. So pullbacks and shorts until the pound increases their decreases their interest rates, in which case then this will probably go straight back into that type of movement, which is absolutely fine. Pound New Zealand 150 ADR. If you're trading RSI 70-30, because you will get just tons of cash out of it, because it will just keep going. You'll go long, you'll go short, you'll go long, you'll go short, second short out, or in that one, go long, 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 short. Yeah. So as long as this thing, and this always moves very nicely, it just doesn't move very much. It's almost like you want to run double the risk on this thing, apart from if we go into something like COVID, in which case the Eurozone collapses because it runs on tourism. And if you can't go to the country, you can't make money. Whereas in the pound, we don't care because we are a business and services based country. So therefore, we just carry on banking. So yeah, Euro pound, good for shorts when you get an opportunity. Right now, it's a lovely long off of an RSI extension. So push up into there and then look for shorts, but you can place that retracement. You probably missed it though now. Euro New Zealand, just got into this one short. So we're just pushing up into these highs. So if we're going to continue to range around, that's where we're going to be looking for short opportunities from. At some point, though, in the next sort of 3 or 4 weeks, even if this doesn't, if it just goes into some horrible range, we will get that drop when the euro rate changes. And euro US dollar, this is not the euro, this is the US dollar. It's just useless. Absolutely useless at the moment, the US dollar, because the Fed not giving us any clues. So we're totally stuck sideways on it. You struggle to get an opportunity on this anywhere at the moment. So a little bit like the euro pound. You could have scaled in and out of that thing, but it would have taken you a week. So it's just not really good for anything at the moment because we haven't had enough news to move it. So sideways on that one. Pound US dollar, a little bit more volatile because we've got a bit more coming into the pound at the moment, but very similar. So that's all the euros. Pound, odd, looking for short opportunities, nicely extended on RSI. So we've got nice propulsion moves up here, which it's going to aim for. So short it out of there or get in now, depending where you want to get out. That's a good target to the downside. So it's either going to come up into these propulsion or it's going to come down into that. So this reversal will either hold, we'll pull back and go long, or we'll just flag and move up into this area and then pull back on that leg. So could take a short, but that would be a scalp, although it is extended on RSI. So it's not actually a bad opportunity to go in short now as well. So, but as you can see, very much like everything else, lots of ranging, bit of news, lots of ranging, bit of news, ranging, news, ranging, news, ranging. What are we doing? Moving on news, but no direction, just ever so slightly bearish, but not really enough at the moment because we need to know what's happening with interest rates. Yeah, pound CAD nicely extended to the upside at the moment. Obviously, the Canadian dollar's just had some bad news. We're coming up into this beautiful quadruple top. So this is a previous monthly level, which we hit, reacted 3 weeks ago, came back up to it 2 weeks ago and reacted again. We're coming back up to it now. So good looking opportunity for short on this pound CAD. RSI is also extended. Beautiful divergence. Yeah. So relative strength dropping, price still pushing on low relative strength. So good looking opportunity for a short. If that holds this area, then there's a good chance we'll put a new low in at some point down there. But we'll have to wait and see what happens at these highs. So initially, if we do get to those highs, you'll get limit order triggers. So that's ADR today. That will also be nice, obviously, extension on RSI. So if we do get limit order triggers there, it's either going to push back and pull back and push up and break through that level, in which case then you take a second or potentially third on its way up to the monthly highs. And then you'll be extremely extended on that leg as you were there. And then it will pull back off of those highs there. So up to you whether you fancy getting in around about this area as a short. It is extended on the RSI, so we have had a fairly decent move on it, as you can see. Or wait on it to get up to there. But either way, if you get in here and you're spacing a half an ADR to 3/4 of an ADR apart, you wouldn't be in more than 3 positions by the time you get to that monthly high. And if it gets all the way up to there without pulling back, it's going to need a rest. So they'll want to take some profit on it before they decide what to do with interest rates. So, but you're still looking at potentially, a week or so, maybe even to get up to there. Pound Swiss, just coming up into the highs again on this one. Same sort of thing. So beautiful rejection up at these highs. We had this propulsion move, which they added into, accumulated around, and then we double topped there. Haven't looked back since. So first retest of that propulsion move got sold. We're back in it now. So potentially this area here, just shy of ADR, is a lovely resistance bounce point. So the only thing that isn't going for this is they probably took profit during this 3-4 day accumulation. So it doesn't really need to necessarily pull back on this. Yeah. So as you can see, it's not extended. We were extended, but we didn't actually get a pullback. So different ways banks take, or rather institutions take profit. You either get that lovely market structure, or they push and they just take profit in multiple trades and accumulate. And then obviously then you break out, which is why the RSI fails, because if they do not do the major profit take move and everybody jumps on that, you get the accumulation. And then the accumulation can break high or low. It's 50-50 shot, isn't it? So you reset RSI and then it pushes up again, which is why you get into drawdown, because you don't get the opportunity to exit. So we're just scaling in and moving our price ready for the next pullback. Pound New Zealand, again, lovely resistance coming up. So another opportunity there. Beautiful resistance bounce points coming up at the moment on all of these pairs on the pound at the minute. So nice strong move up into potential resistance. Again, we haven't got any indication from Bailey and the Bank of England as to anything concrete as to when interest rates are going to change. Markets sort of thinking August. September, maybe, could even be sooner than that. So we'll wait and see what the euro does in June, but we are typically not far behind in the UK. So potential shorts out of there because we'll be sitting in a holding pattern until we know. And the pound US dollar, lovely bearish move at the moment. So this US dollar is strong, more bullish than bearish. It's not got any real strength of direction. It's very neutral at the moment. So whatever you're trading against it will be pushed around by it on news. So at the moment, pound bearish, and I can't see any reason why it won't continue to do that. But we need some decent news from the US dollar. So obviously if the US just keeps getting, the US is massively reactionary to news at the moment. So if it gets negative news, it just will do that. And if it gets positive news, it will do that. That's literally all it's doing, because there's no real bias at the moment on it. So they're just reacting to short-term news. And that tends to give you sort of the ADR hit, stop, ADR hit, stop. Yeah, type of patterns that we're seeing everywhere at the moment. Yeah. Sit around for a week. Bit more news. No, it wasn't very good. Sit around. Get some news. It's literally what we're seeing at the minute. So much accumulation when there's no news. Is what it is. Afternoon, what's with Adaleson? Hello. What is going on to take the drive? What is going on to take to? What is going to take to drive Aussie New Zealand to a 50% retracement? No idea. Driving me nuts. Aussie New Zealand at the moment. Just not doing anything. We keep getting the news. The news from the Aussies and the New Zealanders is non-directional, and it has been for months. There's nothing come out of either of those two that has given us any real good bullish or bearish stance. The last two interest rate decisions on the New Zealand dollar have driven it nuts. Although there was no bias because it didn't change. The market is just having, that was the other one. That was the second New Zealand dollar announcement. So this one, they sent it skyward for no reason. That one, they sent it down for no reason. And then they sat there. And then we've had this big push there. Sit, push. Yeah, it's just not profit taking at all. So I'm on the verge of having to get out of some of this if it breaks the high of the week, I'll be evacuating it because I can't sit in it anymore. It's just costing too much money. This is the killer at the minute, is swaps. It's just, this move here. So ADR on this is 45. If you look at that move on the news there, up to there, it's 3 ADR. Yeah. But it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24 days to break out an entire trading month. Do a 3 ADR creep and a 2 ADR creep back. Just, you can't do anything with it. It's just not market structure. It's just grind. Horrible grind. Meat grinder. Grinding away in swaps. What it's doing. Afternoon, Youssef. I'd love it to come down personally. Same as US dollar Swiss. That's not helping me this morning either. But yeah, can't do anything with it. Can't trade that. It's just, you have to sit in it. This is just not what I'm used to, sitting in stuff for this long. Because, like I've said many times, I've never traded through this situation. It's just an abnormal thing that we're sitting in at the moment, waiting for the Fed to change their mind. This is, what's the Fed up to? Not sure. What's the Fed up to? Not sure. FOMC, what's the Fed up to? Not sure. I'm pretty sure that's what we're going to get. Yeah, or that. And if we get that, I'm out. Because I can't sit through it for another month waiting for the Fed to make their mind up. Just too much of this sort of price action at the minute. It's hence moving the RSI down, because if you can get into stuff on 70, and I will be scalping so much out of this, just getting out with an amount of money at the moment. I'm also going to start doing drawdown faster as well. If something goes 1% in drawdown against me, I'm knocking 30% of it on the head. I'd rather take lots and lots of losses than sit in squeezes, because taking losses quickly is going to stop your lot size hold and cost you way less in swaps. Just scaling out of stuff. And, getting in with a good lot size multiplier, 1.3, is going to give you the opportunity to get out on these tiny little small moves. Oil's puking, is it? I'll trust you on that. Only Tuesday. We haven't got any oil news, have we? Market's opening in 5 minutes. Oh, there you go. Brent costs 1.1 versus 0.7 quarter four. So the quarterly, this oil prices are not reacting as they should do at the moment either. There's so much stuff that is fundamentally just not working. It's just weird. But you do. So high resistance US dollar Swiss, good looking short opportunity there. Obviously, if we're going to do this, I'd be very surprised if we get a massive move on the US ahead of FOMC tomorrow and unemployment rate on Friday. So I would imagine we'll probably drop. Could well drop at 3 o'clock this afternoon when we get the numbers. Quick question, why you change from M5 to M15 as a signal entry? Doesn't make any difference, really. Not a lot in it. I've just switched back to M5, actually, funnily enough. I'm running on 5-minute charts again now. Doesn't make a lot, especially at the moment, it doesn't make a lot of difference at all. Really doesn't. The 15-minute reversal and the 5-minute reversal, when you've got stuff going on like this, it's such a small difference. But again, preference. People are very exact with what they expect a system or a strategy to be done. Because everybody's taught You have a set of rules. You stick by it to the letter. You don't do anything different. Yeah. So if it's a 5-minute time frame, it's a 5-minute time frame. For you, 15, it won't work. Yeah. This is position trading. Yeah. If you get in 20 pips different to me, it's not going to make the blindest bit of difference. It's going to come down at some time. Yeah. So use the 5 or the 15-minute crossover, the 5 or the 15-minute reversal alert. It's just a signal. Yeah. So if you go down to the 5-minute and use the 5-minute moving average, you'll get an entry there. If you use the 15-minute moving average and the 5-minute does that, and the 15-minute gets you in up there, you get in there. The odds of the trade working are the same. It's 50%. When you get into that trade, it will either come down or it won't. All it is every signal you get, reversal alert. That reversal alert there was showing you and telling you the buyers have entered the market. The moving average crossover happened probably there. It's telling you that buyers have entered the market. That or that is either right or wrong, depending on which way the market goes next. That has nothing to do with which way the market goes next. So whether you take a trade on a 5-minute time frame or a 15-minute time frame, over the next X hours or days, price would either push up or down. We don't know. So it doesn't really matter, does it? Go and do a test with the Position Trader EA on the 5-minute chart and on the 15-minute chart and compare the results. They'll be different. That's all they are. They're different. Yeah. So whether it's better or worse over that time frame that you tested, that time period you tested, is irrelevant because that's never going to happen again, is it? But it will just give you an idea of the difference, and it won't be much. Test it. It really doesn't make any difference. There's a much bigger difference between trading hourly time frames and above. An hourly moving average cross or an hourly reversal alert, you could have 5 or 10 5 or 15-minute alerts before you get that hourly, because on higher time frames, you need a much stronger push, don't you? So the reversal alert there has just happened. On the hourly time frame, it's exactly the same spot because we're ranging. Make any difference, does it? But in a very strong move like that, mean reversion plays and a strong trend, the 5-minute time frame will just get you in faster than the 15. But it doesn't mean it's right, does it? It just means you'll get in quicker on a smaller amount of buyers. Now, that is either going to be good if it does that or bad if it does that. This you can't control. That you can, but it doesn't make any difference to the future because you don't know what the future is. So stop worrying about it. You can't control it. Everybody's trying to, it's totally normal from a human being perspective to want to be in control. And this is where everybody struggles with trading. You want to control the absolute uncontrollable randomness and chaoticness of the market, whatever you're looking at on the chart. I have no clue whether that goes up or down. So whether you get in on a 5 or a 15-minute up there has got no bearing on whether or not the market participants have decided they want to drop this price next. Can't control it. The only thing you control is risk. The lot size you take if you decide to go short and what you decide to do after that trade goes against you. If it goes your way, there's no decision to make, is there? Happy days, put it in my bank. If it goes against me, I have a choice. I can scale out, I can add, I can close completely, I can do all sorts of stuff. But when you get in, all that is a reason to have an exposure to an instrument. You flip a coin right now, yeah, you're going to be right or wrong. If it comes out heads, you long it. What are you? A breakout trader. If it comes out tails, what are you? A mean reversion trader. Does it matter? What's the right thing to do? Take the breakout or take the mean reversion? Come back tomorrow and we'll find out. But until then, do what you like. Doesn't matter what signal or strategy you use, you do not know what's happening there. So whether you enter on a 5 or 15 or 30-minute time frame has no bearing. Yeah, candlestick patterns. This is why everybody gets so obsessed with candlestick patterns. Hey, look at the tail there. It flew up. It did. But look at the tail there and look at the tail there. It didn't. Doesn't mean it's going up. Just means it's got a tail. There's a whacking great tail there and it flew up. There's a whacking great tail there. It didn't go anywhere for hours. And then it popped up by a tiny little distance before it stopped you out. Doesn't matter. You've got to just get in. So, and all the 15-minute time frame does is it smooths out chop. So all you should be doing when you're looking at time frames, the time frame is just a representation of price over time. It has nothing to do with future. So a 5-minute time frame is choppy. A 15-minute time frame is less choppy. A 1-hour time frame is less choppy, and a 4-hour time frame is less choppy. Yeah, more confirmation of what has happened in the past. That's all you're getting. No indication of what is happening in the future. You're getting more confirmation. That 4-hour move, yeah, you didn't see the buyers and the sellers in that one. You just saw the buyers because it opened there, it pushed up, pushed down, and it closed there. So all you see is one big one up. There you got an up and a down, probably an up. Yeah. There you got an up and down, and up and down, and up and down. There you got loads of up and down, up and down, up and down. You got 5 reversal alerts in there, one in there, one in there, and you haven't had one here. All you're doing is you're extending the time that you're looking at. Doesn't help you because it's not about how you get into the market. It's about what you do after, because that's what makes you the money, not that. Reversal alert there isn't going to make you any money. It's going to get you in to a position which the market will decide your future on. That's it. So don't worry about it. I just, like I said, this is part of the problem that I've had over the weekend with people contacting me saying I'm wrong on everything. Of course I am. Yeah, if I was right on everything, I wouldn't be sitting here, would I? Doing this, I'd be sitting in a jet flying around the world, visiting every country on the planet, because that's what I do, make money without ever being wrong. No one is ever right or wrong. Everyone is just in. The market decides whether you're right or wrong. So whether I use the 5 or the 15-minute time frame just adjusts when I get into the market. Yeah. When the market is pushed up, I will either get in there or there. But I'm getting in. I don't know whether that's the best place or that's the best place. I really don't. Neither do you. No, neither does the bank. They don't, because they are not in control of where this thing goes. They are one of 10 large institutions that has a possibility to move it. Yeah, they don't even use indicators, so it doesn't matter to them, does it? So, anyway, yeah. I don't know why I was waffling on that. Oh, 5 and 15-minute time frame, wasn't it? So, but yeah, use what you want to use. Yeah, everybody's trying to follow my exact what I do. That isn't going to work, because what I do is what I do. It's not right. It's not wrong. It's just different to what other people do. You manage your positions, your portfolio, depending on how you've got in. If I've just pressed the button to go short on something, doesn't mean it's right. It's really bloody wrong. Look, it's already pushed. Nearly half an ADR against me. Yeah, I had no clue that was going to happen. If I had, I wouldn't have done it. But does it matter? No. What matters is now I'm short Euro New Zealand. If it gets up to there, the EA will take a second position, move my price for me, and I'll get out when it comes down. When's it coming down? No idea. Should I have waited for a reversal signal? Absolutely. Yeah. If this thing drops like that now, you will get in there. Unlucky, I will be getting out there. Who's right? Who's wrong? Don't know. Depends if it drops from there. If it drops from there, you're also right. I am wrong to get out there because it went down twice as much. I'm wrong. You're right. See what I mean? It does not matter. Everybody's got to stop trying to find the Holy Grail. It doesn't exist. What about Renko? Go on then, use Renko. When you get a block by a Renko chart, what does it mean? Price is pushed up. What does that mean? Price is pushed up. What do you do next? I'm asking you because I don't know. When you get a Renko block that is green, what do? Press the buy button? Yeah. What happens when the next Renko block comes out red? What do? Wait for the next green block and then go long again? Or, do you see what I mean? Indicators. Everybody's looking for an indicator that's going to make them money. There isn't an indicator that makes you money, is there? Nothing makes you money in this market apart from the market moving in your direction. You cannot find an indicator that does that. The RSI doesn't do that. The RSI said there that the market was extended to the upside and was likely to come down. It did. Did you get out there? No. Unlucky. You're still in it. The right thing to do when the market got up to there was hit the short button when you got some kind of signal and get out there. But if you had your target there in that propulsion gap, you didn't get out for another 5 days. That's cost you 6 or 7 days worth of swaps you weren't expecting to have. What was the right or wrong thing to do? There isn't. There is just what is. That's it. It sounds very profound, but that is the real world. You can hunt for your entire life for the system or strategy or indicator that works. They all work. They all fail. It's what you do with everything, which time frame you use. I get asked all the time, well, not so much anymore because I did a video on it, but I used to get asked all the time, what's the best time frame to trade? The answer is always, what can you watch? If you work full time, 4 hour and daily, because you can't watch the 5 minute, you're at work. If you don't work, 5 minute time frame, because it all moves a lot faster. It's all more choppy and you're highly unlikely to make any money, but you can watch it. So which is the best one to trade? The one you make money out of. Making money has nothing to do with the time frame. The time frame is a representation of price over time. Yeah. A bearish engulfing on a daily candle is the same as a 5 minute candle, except only 5 minutes have passed instead of however many minutes are in a day. That signal is the same as the signal on the 5 minute time frame. They both have the same odds of working. 50%. Whether you use Renko, whether you use open, high, low, close, whether you use candlesticks, whether you use a line, make any difference to how you make money at all. Everything works on candlesticks because people can sell stuff based on candlesticks. If I told you just to stick a line on your chart, you wouldn't have a clue what to do, would you? But what you can do is press the buy or the sell button and either price goes up or down. The fact that you can't see anything has got nothing to do with making money. The reason you make money is if the thing goes in the direction that you press the button in. That is 50-50, always. And you can only control the lot size and the exit. Those are the only things you have. When you get in here, because of absolutely no reason whatsoever, you have now one thing you can do. Press that button. Whether it is below or above is where you make money. Nothing to do with any of this. True. This is why every backtest you ever do with any EA or strategy never pans out the same, because there's not two candlesticks on a day that are the same ever. So how can you possibly have any information that you've tested there tell you what is going to happen in the future? It will give you an indication that sometimes when that happens, but to the extent it will happen is never the same. So if you go, every time I take an RSI short and I go for one ADR in the past, it's always worked. If the market contracts and it only ever moves 3/4 of an ADR for the next 6 months, that lot's out the window. But you will never know what it's going to do there because that isn't going to happen again, is it? So forget about timeframes. Trade what happens. Trade what you see on your chart as an opportunity. And that is, we know support resistance works, but we never know exactly where. We know that when support resistance works, price moves down. We never know how far. If you're trading with Renko blocks, you might get 1 block, 2 blocks, or 3 blocks. When you get out using that button is what you make. How many blocks are down to the banks, not you. It could go like that. Yeah. If you want to cut noise out, Renko's great. But it can't be used as a signal. Yeah. It can't be used for support and resistance because it doesn't react at price points. It reacts after a number of ticks. And whether or not the market pushes the ticks is irrelevant. Yeah. So it's, it's all irrelevant. One button you got. That's it. Find Renko is not so noisy as the candles. Yeah. But that's because you're looking, YV, for the Holy Grail still. You're looking for something that tells you which way price is going. That's the best chart you can use. Yeah. Where are the bank's orders right now? Yeah. Is there any reason for them to go long at the moment? Is there a reason for them to go short? Yes. Will they? Don't know. But a Renko block isn't going to tell you anything but what's happened. Yeah. I've spent 20 years nearly studying this. There's no pattern that repeats itself enough. Using an order in the market that says get out with a loss, there's not enough patterns that repeat themselves to make that profitable. On its own, there are ways to do it. So I hit the sell button here, right? And I put a stop loss here. When the market moves down here, I have to have the market move at least to here to make money. If when the market moves down to here, I add a second position, I only need the market to move there. That's a good spot to get out because it's a 50% retracement on that. But you can only know this information when you have entered, seen what price has done, and seen what price has done next. Yeah, it either hits your stop loss and you lose money just because the market moved, or you scale in, move your price, and wait for the market to move in your direction, which it generally always does, doesn't it? Apart from the odd instance at the moment where we've got these weird squeezes going on. But there's nothing that can tell you what to do. You have to have a system, you have to have a strategy, you have to have an indicator that gives you a signal. So you have to have a set of conditions in the market that you like. But they're not going to help you make money. You make money by waiting, sitting, waiting. This thing I've just got into now, I may be in it in a month's time. I may be out of it tomorrow afternoon. I have no control over that. It doesn't matter what candlesticks you use or what indicators you use. I am now short biased on the Euro New Zealand. That's it. Yusuf, because I tried to backtest on M5, it just blew the account. Yeah, it blew the account over the time period you tested with the risk that you used and the conditions of the market of that time period. Yeah, take the same backtest, put it over a different period of time on a different instrument. You will get a different result. Yeah, none of this. Go take a screenshot of this. Go and find me a chart in history on any pair on the planet, stocks, crypto, indices, Forex, commodities, whatever you want. Go and find me exactly this pattern. I won't ever see you again because you'll never come back with it because it doesn't exist. Yeah. If you run a backtest over this right now with any setting on any EA, on any strategy, you will get a result, right? You can change the parameters of that instrument, of that EA or that strategy to make it profitable. But because this will never happen again, it's never going to work again. That set of criteria will not happen again. Yeah. So whether you use a 15-minute time frame or a 5-minute time frame doesn't matter. What matters is it gets you into positions which you then manage. What you've found, Yusuf, is that the way of scaling in or out of the market with targets and exit criteria that you used over that time period weren't suitable at that point. The next month, those settings could be absolutely spot on. But unless you've got a time machine, no one can answer that question for you. You just have to use it, which is why you have to adapt. Yeah. So there are things which are better to do, and there are things which are worse to do. Getting into a trade after it's hit 150% of ADR and then scaling in a quarter of an ADR apart are not a good thing to do. Go and back test that, and you'll find that it will make some really serious money before it goes pop. Scaling in half an ADR apart is better than a quarter, but it won't make you quite as much money, but your account will last longer. Scale in one ADR apart, and you'll find you'll be in trades for months, but your drawdown will be tiny. Whether you entered on a 5-minute or a 15-minute really doesn't matter. You could enter on an hourly. Really doesn't matter. But that exact criteria that you've just tested isn't going to happen again. So, you see what I mean? I'm not being awkward. I'm just saying what the truth is. I love my reversal alert indicator. It tells me when the market has shifted direction. Look at that signal. Wasn't that spot on? Yeah, there's 100 other signals that haven't worked. That one did. But if you are going to use a line that means when a signal doesn't work, you lose money, you will lose money. There's 100% guaranteed accuracy in a stop loss. It's the only thing I've ever found in trading that has 100% accuracy. Yeah. Whether that stop loss is behind your entry or above your entry is irrelevant. Every time it hits it, you're out. Brilliant. But if you don't use them down here, you won't lose money. If you do use them up there, you will make money. I can guarantee you that as well with 100% accuracy. That's the only thing I can tell you. And also that the market will go up and down and it'll move through time. Those are the 3 constants of trading, and those are the 2 things I know to be true. Apart from that, flip a coin. But flip a coin with some degree of, some idea of something that has happened repeatedly. Yeah. And we've got weekly range here on the Euro CAD. It's only Tuesday. Euro CAD. Big move up on the Euro CAD. 150 ADR. Canadian dollar looks like it's... no, this is Euro. Euro's rallying. Vilroy, monthly inflation data may experience some volatility. Inflation data raises confidence of reaching target. ECB will thus be able to lower rates early June. Cool. So still bearish euro. Again, this. Why is this doing this now? Yeah, all the conspiracy theorists out there and all the ICT people will be telling you that they're reaching for that liquidity. Yeah, all the people that are bank conspiracists will be telling you that they're all trying to entice you long so they can take out your stops. Yeah, what I know is the thing's going up. I don't know why. I don't care why. What I do know is that when the interest rates come down, the euro will drop. So if this is going to retain market structure, we should see a double top here and move into a range. I have no idea if that's going to happen. Doesn't matter, does it? But there isn't a signal or an indicator that's told me that the ECB were going to make some announcements this afternoon that would make this thing scream through the roof. So therefore, what is useless? Indicator. What is useful? Me being short and having the opportunity to move that price up and wait for the price to come back down again and hit that button. That's what makes me money. Not the EA, not the indicator, nothing else, but me seeing a positive amount and taking it. I find Renko is, I'll just answer that one, not so noisy, which is true. It is not. Renko charts are, I used to trade Renko. I also used to trade all sorts of Renko and Heikin-Ashi. They are great for smoothing the market out, but it's for color. It's for people that like to trade by colors, and there's nothing wrong with trading by colors. because, you know, Heikanashi just makes everything green and red, and so does Renko. So it's, if you can't read market structure, they're brilliant. But on themselves, they will give you market structure because they do that. And then it will go up one, and then it will go down one. That's market structure. Except you're going to get in after that much movement. So it's a delayed reaction, basically. It's smoothing it out for you, but it's meaning that you don't get to see the price action. So if you had price push up, and then you saw a shooting star go in, and then price pushed down, pushed up again, and you saw another shooting star enter the market, and then price pushed down, a candlestick pattern trader would look at that and go, brilliant. They can't get through that high, and it's at a support, resistance level. On Renko or Heikanashi, you'll see that. What's that? A range. Does that help you in any way, take a short? No. Next one could be like that, couldn't it? We don't know. But it's a measurement of distance, isn't it? That's all it is. It's showing you a measurement of distance. You can see that with a line chart. I spent a long time on Renko. I spent a long time on Heikanashi as well. Nothing wrong with them. You know, it's all about finding what works for you. If you find something that works for you and gets you in, that's great. And if it gets you in with a decent degree of accuracy, that's brilliant. But it's not how you make money. Yeah. It's how you get in. That's not how you make money. It's how you get out. That's how you make money. I use Heikanashi and 50 EMA just for quick scanning. Yeah. Exactly. I've been testing this morning with an EA that I've been building and developing for a breakout strategy. And I have tested with multiple moving averages. None of them work, and they all work. It's incredible how rubbish moving average really is. If you use it for a trailing stop, it gets you out too soon. It very rarely saves you, but what it does is it gets you out too soon because it's a trailing stop mechanism. If you use them for breakouts, they're brilliant when the market's not ranging, and then they're absolutely useless. Trying to get a positive P&L using any kind of moving average is virtually impossible. Yeah. And you'll see the odd trend like this one here. So, you know, you take that breakout in the trend. Yeah. Your risk is always down there. Your reward is always got to be more than your risk. You get 1.2 out of it if you're lucky on the vast majority of it. It just is so unbelievably difficult to make money. The only way you make real decent money is catching that part of the trend. Yeah, it's the breakout. You know, it's the breakout from there. That's where you make your money. Or the breakout, the retest. That's the absolute beauty. So what I'm working on is ADR breakout extension retest entries, which are brilliant. But the exit mechanism, very hard. You need to get in with a seriously big amount of money and a very, very, very tiny stop. They don't work either. I like listening to you. You're a smart guy, but sometimes when you say something, it's like you're never going to make money in the markets. I know. No, you are, Yusuf. But this is the whole purpose of the bootcamp, is to teach people why they're not. I'm not saying you can't make money in the markets. I've been doing it for years. But what you're not going to make is mountains of money without mountains of money. This is the problem, which we know about because we've been talking about this for many years in the live rooms. Everybody that's selling the Lamborghini courses, yeah, I've got one here on my desk. That's as big as it's ever going to get. Because unless I've got $1 million in the bank, I can't make enough a year to make one of those purchasable. Yeah. You can make a percentage return on your account, which will be somewhere between 5 to 15% a month consistently. You cannot make more than that consistently, because the only way to make that consistently is to get lucky. Yeah. If I had bought here, gone on holiday for 2 weeks, come back, opened up my terminal for the first time and seen I was up there, that's what I need to do. But if I watch this chart at any point when I saw that and my P&L jump up to 3,000 and then drop down to 1,500 within a day, I'm going to take the 1,500 in case it disappears. I'm not going to hold it to there. I can't. Neither can you. Neither can anybody. I don't care what systems and strategies they teach you about doing this. You can't hold it. That's why people don't make money in this market, because they stop out of the market before the potential is achieved. The best way, in my opinion, to do this, to actually make money, which is how I've always done it, is to get in and wait and see if it goes in my direction and take a little bit of money. If it doesn't go in my direction, I'll move my price to a different spot and wait for it to go in my direction to make a bit of money. That's the only way I know how to make it. But I can't make Lamborghini money doing this. But I can do consistent making money doing this. And it doesn't rely on an indicator to do it. It just relies on the P&L and price moving below my average price. That's it. Or above my average price. That's it. I'm just waiting for the market to move, but I can't do it with high stakes because I will blow the account. And I can't do it with a stop loss because it will just get taken away from me by my broker. So the fruitless hunt for the indicator or the strategy that can circumvent those two facts of life isn't out there. And no one has ever shown me it. I don't care how many times you show me a strategy. There's a beautiful strategy. There's many beautiful strategies I've seen on the internet. Yeah. I'm a practical guy. I'm a programmer. Yeah. I build an EA to test that strategy. Never works. Never works. Yeah. It doesn't matter what you do. It doesn't work because every strategy is developed on historical fact. It's never seen a pandemic. It's never seen a banking crisis. It's never seen a Japanese yen intervention. It's never seen a Swiss franc safe haven run on a Russian invasion of Ukraine. Yeah, there isn't a strategy out there that isn't going to survive this. And something like this happens all the time. Yeah, interest rate rallies, interest rate drops, unexpected news events. Yeah, none of it. What about the TPO profile? Tell me how to use it. Your TPO profile is only available in futures. Futures you can't hold overnight, which means you've got to do what? Trade the 5-minute charts. Good luck making money scalping. Yeah, you can't hedge either. Luck. It's all about luck. You know, this is the thing. You have to either be an incredibly experienced, lucky person for a long period of time, of which there are very few out there. But, you know, if you go and find any kind of indicator that works on time, price, and volume, you can't build very easily automated strategies around them because they're dynamic. They change throughout the day. Yeah. So a market profile or anything to do with volume, etc. Yeah, is dynamically drawn day by day and changes every day. So you can find historically sets of criteria which will work a certain amount of time. But the problem is when we get to this volume profile bulge, for example, 60% of the time price moves away from it. What you cannot determine is how far, because the reason it moved away from it is impacted by what happens after the movement has started. How many people after that movement happened jumped on board? That will determine how far it goes. So if you set yourself a TP there, or there, based on what's happened in the past, they will not be respected in the future. And work. But again, I set up a page on the website for people to give me strategies that I could build EAs for to backtest for them. No one's given me one that's worked. Or people have given me strategies with 5 indicators in them. Too complex. Every time you add an indicator to a strategy, you are multiplying the complexity of this strategy by X. Yeah. So if you have I have an RSI, yeah, condition indicator, and I have a signal indicator. moving average, market reversal alerts, whatever you want to do. Those are the only two things a good system should ever have: a condition indicator and a signal indicator. The other two things you need are an exit strategy, and a backup plan. Your exit strategy is either a stop loss or an addition. Your exit plan is where you're going to get out. There is nothing more complex than that. If you add an RSI to a MACD to a stochastic, that is 3 levels of complexity that have to line up. So when you go back in the past, the odds of those things ever happening again in the future is 3 times less likely. If you flipped a coin, right? I mean, it's as simple as that. If you go to a daily chart and you basically build a strategy around the fact that price has hit a previous high and had a down day, that is as good as flipping a coin. The next day will either be a breakout or it will be a continuation. That's the best strategy in the world. No indicators used at all. It's going on the fact that yesterday people sold it. Today they will either continue to sell it or they won't continue to sell it. There's no indicator on the planet that tells you that. This is about as good as an indicator I have ever found for telling you where price is going. Yeah, because this tells you where the banks have been and where they are likely to come back to. So the buyers are buying from here. When we get back here, they will buy it again and again and again because they're buying it. The sellers are selling it from here. When we get here, we will sell it again and sell it again and sell it again. Yeah, this is historically telling me where the bank's orders are. We know the banks move to areas of liquidity to complete their orders. Nothing else that gives you historical information that I think that you could ever use that's got any more accuracy than that. But when I get there, it's either not going to work or it is going to work. It's a reason to get in, and that's all it is. 200% ADR on Euro odd. Look at that. What's going to happen tomorrow? Yeah. If you look at that candlestick there, we had 3 days of push. If you look at that candlestick there, we had 2 days of drop. What's going to happen tomorrow after that candlestick? 100% guaranteed I can tell you one of them. But if an indicator tells you that it's extended and there's a likelihood of it dropping, get in. If it doesn't drop, deal with it. Don't get out. Deal with it. You're wrong temporarily. You only have a temporarily wrong on it, isn't there? Because every single day there's a 50-50 chance. So you only have a temporarily wrong. Every indicator gives you an indication that the likelihood is that that might happen. Yeah, that reversal alert held. The reversal alert you got there didn't hold. So if you got in on that reverse alert and got in on that reverse alert, your average price is there and you're in profit. Don't get out because it's wrong. All it's done is get you in. That's my thoughts on it, just from experience of looking for the Holy Grail for X number of years and not being able to find it. The only thing I know that works is price respects levels it's respected before, and it heads to areas where there's been large buying and selling. At the moment, there's a massive area of buying there, so I imagine they'll come back to it because that's what they've done. Look at this chart, all these grey blocks here. That is all these blue blocks getting hit again, which means that these blue blocks you can see now are likely to get hit again. When? Don't know. But if you want to go short, go for it. If not, they'll probably do that and then that. If they do that straight away and you hit the short button now, get out. But don't get out because, oh, I haven't got enough money there. I haven't made enough money. What is enough money? The only reason you need enough money is if you've got a risk that you have to make up. If you have a risk of 10 pips on every trade that you take, you have to make 15 to 20 pips for your system to become profitable. If you just get in and it doesn't matter how far it goes against you, you just get out with money. It doesn't matter, does it? This is what all the systems and strategies are trying to find, a positive risk reward ratio on a random dynamic instrument that changes every time you get in. It's not possible. AI couldn't even do it, because all AI is going to do is analyze the past. It doesn't know what the future is. Because I just switched using from the Market Reversal Alert CA with H1M5 mean reversion, and it was a success. And I wanted to switch to the position trading. Wondered why use H1, M5 or 15. Yeah, just use M5. Honestly, it doesn't matter, but use M5. You're using a different entry signal. Yeah, the condition is the same. This is with the Market Reversal Alert CA and my mean reversion strategy. It's not the signal that is important. It's the condition. It's elastic band theory that when the market has pushed in one direction, the banks and institutions will take partial profits on that move, or full profits in this case. Yeah, partial profits didn't quite work out. Maybe you didn't get out there, so you wait and get in again and get out on that one. Yeah, so that's the strategy. It's the theory that price pushes and pulls. The problem is everybody's looking for when to pick this area, which you can't, because that area is not determined by you. It's determined by market conditions that require the banks and institutions to do stuff. You can't control this. What you can control is when you get out this button. Yeah. So the condition is the important part. When the condition is met on the hourly time frame, you could hit the button, right? So here, right now, Euro odd, there is no signal to go short. You could hit the button right now. The condition is correct. The condition is extended. Condition is extended. Condition is extended. When you get in this direction is up to a signal indicator. And it could be as simple as a bear candle. It could be a crossover of a moving average, EMA, SMA, smoothed, 5, 9, 12. I don't care. Pick one. Doesn't matter. What matters is you will get in when the condition is hit and the sellers start to enter. Market reversal alert indicator is showing you that the structure is broken to the downside. That can only be done by the opposite party taking control. When the opposite party take control, the moving average will also be crossed and a bear candle will form. Don't care. Pick one. The condition is the important part. 5 minute or 15? I don't know. How long is it going to take for the signal to appear? 5, it's going to appear faster than 15. Could use a 30. It'll be slower. You'll probably get in later. There's much more sellers in. You know what I mean? It doesn't matter, does it? Yeah. If you get in there, it's either going to do that or it's not. If it doesn't, deal with it. That's what you do. Yeah. TPO. Anything that shows you where the market has been. Same as these things. They show you where the market's been. The market has been here. There was a load of volume coming and then it moved away. Why does it matter? What makes the market come away from that level again? Because it was there before and a load of volume came in, doesn't mean it's coming down. It means there's a load of volume there before. Historically, when we get there, sometimes it comes down. Sometimes that works. Everything is a sometimes. There's nothing that is an all the time. And everybody goes, well, that didn't quite work well enough because it didn't get me what I wanted. What did you want? Yeah, to make money. So just get out when it makes money. This is the problem. Everybody tries to get in with too much risk, isn't it? Yeah, I get in with 1% because I can get out faster. You can also get a lot less money by all the stops faster as well. Get in with a small amount and then don't worry about it. If you hit the button, and I've always said this, and I got taught this a long, long time ago. If you hit the button, right, and after the first candle's formed and it goes against you, you're uncomfortable, you're in too big. You shouldn't be uncomfortable. I've hit the button on this and I couldn't give a crap what it does. UN New Zealand has gone against me by half an ADR within an hour. I don't care. Not making me any... I could hit the button right now. I don't even know what the monetary amount is, but I know it's insignificant. Doesn't matter. That should be your approach to it because you are not going to get it right. You're going to get it wrong more than you're going to get it right. Just accept that fact. Everybody's trying to make themselves better traders by finding something that makes them more accurate. You can't be accurate in a 50-50 situation. You are 50-50. There is no way to make yourself more accurate. have to have a set of conditions to get in. That's it. Like it or not, I had to study and demo trade for a year before going live. Then the school really began. Yeah. Again, going demo trading is not the same as live trading. People get really good at demo. Yeah, this is why people fail all these prop evaluations as well. They know that. The prop firms know that when you're trading on demo, you don't give a crap. All of a sudden, if there's a pay slip attached to it, you trade a very different way. It's gone £500 in my favor. That's my car payment. Hang on a minute. On demo trading, I let that go to 2.5K. Yeah, but now it's a car payment. Oh, now my risk reward ratio is 20% of what it used to be. Why am I losing money? Your brain works in a different way. This is why if you have a lot size that detaches yourself from the finances, your brain works in the same way. Oh, it's not gone the right way. Well, I reckon probably it will come up to here and then it will come down. So I'll wait until it gets there. I'll get in again and I'll move my price up and then it should come down into this area because that's what it's always done in the past. Still, I've no idea what's going to happen, but I know that that is what happens a lot of the time. If it breaks out, what tends to happen in a breakout? Bang. Then what happens? Retest. Then what happens? Continuation. All right, so if I get in here and it doesn't do that, my average is there. If it breaks out, I'll add another one, then my average comes up to there. So when they do the retest, I'll get out. I'm a breakout trader. Or I'm getting in at the start of a trend trade. It doesn't matter, does it? Irrelevant. Random. All of it. Unlike CFD spread bets, can you not hedge futures? No, you can't hedge futures. Futures are FIFO, first in, first out. You can't, unfortunately. Not that you want to or need to. We all know we actually make our money, trading moon cycles. Do it. I have been asked to build them. People have asked me to build stuff based on cycles of the moon and all sorts of stuff. Yeah. If you believe it, do it. But the thing that everybody gets wrong is they're looking for the thing that gives them the risk reward ratio. If you use a moon cycle that says you should get in short here, or you use a moving average cross, or you use the fact that it's a double top, or you use a relative strength indicator, or you use a MACD indicator, what makes you lose money is the fact that you put an order in the market that is saying, if I'm wrong, to remove my finances from me. The moon cycle's got bugger all to do with it. It will work exactly the same as the moving average crossover trade. It will either or it won't, and that's all you have. Which is why big stops work. Yeah, there's nothing wrong with using a stop loss. If you use a stop loss based on the ATR or the ADR of the instrument, and you set it 2 ADR away from where you get in, the probability of that getting hit within 24, 48 hours is virtually zero. So give yourself room to breathe. Give yourself time. Everyone wants to be in and out and done within an hour, which is great. It's a lovely way to be. And it is possible to do it a lot of the time, but it's also not possible to do it a lot of the time. And the times you don't do it are the times that kill you. The TPO profile is exactly the same on Forex as it is on futures. Based on time, not volume. All right, okay, yeah. So I don't know if TPO profile is. Again, if you can show me an indicator that plots TPO perfectly, and you can give me a strategy that makes money out of TPO profiles, do it. I will build it, and we can test it. But I mean, it's all the same stuff, isn't it? At the end of the day, but I'm happy to test stuff. I just need an indicator, and I can build a strategy around it. But you'd have to give me all the criteria for how it makes money. So, and again, that is going to be based on risk reward, isn't it? So, and I'm pretty sure it will plot the same as something else. I keep saying this all the time. that line that I've got drawn at the weekly high, yeah, you will find a billion traders out there, right, using a supply and demand indicator that draws that. It's the same thing. It's a high where price moved away from. Yeah, it's an area of supply or demand, whichever way you want to look at it, right? It's just the turning point in the market. So my indicator draws a line at the weekly highs. You can have an indicator that draws a block around the candlestick. They call it supply and demand, right? It will come out of there, possibly, but it's coming out of there because that's what it did last time. Where it comes out of that area is not down to this block. That is a candlestick, okay? That is an hour of time. If you move over onto the 4-hour chart, the supply zone will be that big. If you move down to a 15-minute chart, the supply zone will be that big. So everyone will be going, hey, the 15-minute is better than the hourly this time. But everyone on the 4-hour will be going, hey, the 4-hour is pretty much perfect as well. Everyone on the hour is going, hey, this is great. It's nothing to do with that. It's the fact that the sellers have just managed to turn up at this point in time. It's got nothing to do with any of that. Banks are just moving the other way. It's a coincidence, just a coincidence, a happy coincidence. But it has got a memory, the market. The market moves from price to price. Why do you think we moved from 160? Because the banks do it. Futures are US regulated by CFTC. You can't hedge yet. I came from blackjack, so I had a good idea of risk management. Yeah. But a lot of those strategies that work in blackjack work in trading. Martingale, very famous blackjack strategy. There's lots of gambling strategies which people apply to the markets because it's not a 50-50 shot in blackjack, but it's similar. The outcomes are win and loss. Yeah. With blackjack, craps, or anything, it's win or loss. Except they pay you more than your losses. Yeah. So it's a positive risk reward ratio. But they know when 100 people walk in, the edge is 55% losers. So it doesn't matter how many people walk in and walk out with 3 times more than they walked in with. There'll be 3 times more people walking out with nothing. At least with trading, we can adjust our price to suit what is happening in the market at the moment. You can't do that in blackjack. You can't go, I'll put $5 down on that hand. Blackjack turns up and you go, I'll have 15 on that. We can. It's the edge. But yeah, martingale. I've built many martingale EAs and I could sell thousands of them. Put them out on the market and give you a set file that is back tested over the last year, because I know you won't back test more than a year because you can't be asked. I'll put them out there and they'll all look fantastic. And then in 3 months' time, I'll redo the set files, launch version 2 of it with the new settings, and that will look fantastic because the settings I ran on the first version didn't work over that 3 months. So I'll just run the next 3 months, find out what the best settings are and pump that back out there. Martingale, brilliant. All the newbies will come in and they'll all lose all their money. 90% of the marketplace. One thing I always ask when someone is demo trading is, how do you feel when you take a trade on demo versus live? Yeah, you won't feel the same. You can't feel the same, can you? Blaytech TPO profile on MQL5. Yeah, I mean, Ryan, an indicator is no use without a strategy. What is the exact strategy, entry and exit criteria for using the indicator? Need to find what that is. New to your stream, just wanted to say I love your truthful and honest advice, which is hard to find. Yeah, I know. Most people are trying to sell you a course for $2,000, which does the same thing. I just told you, you know, that this indicator that I have on the chart, I sell this indicator. I make money out of this indicator. Not a lot, not enough to pay the family. I don't pay the family. Pay the bills. But it does the same as the supply and demand indicator. You can get that for free. There's loads of free ones out there that do weekly support and resistance as well. Yeah. Don't have to use mine. I use mine because I like to have things exactly as I want them to be, because I know that's the way that I want to see it, and that's how I figured out how I can use these things. But everybody's got a different way of using stuff. Same as a trend line. You draw a trend line on a chart. Some people use the wicks, some people use the bodies, some people will go roughly that. None of them are right, none of them are wrong. They're just different. Yeah. Using the bodies is sometimes the best thing to do. Using the wicks is sometimes the best thing to do. Sometimes using one wick and one body is the best thing to do. You will curve fit whatever you draw to meet the criteria that you saw in the past, which won't happen again in the future. So none of that is any use, is it? I paid the wife half when I got divorced. Yeah, I've done that. I know, it's the most expensive thing you can do. People think getting married is expensive. Which is why I'll never get divorced again. But anyway, I have covered everything I needed to cover today, I think. The only thing I haven't covered is the US at the moment. Obviously, US is pushing. We've got a nice extension at the moment on the hourly for a short. US dollar Swiss up in the highs, coming down. I'm in this on my account, my other account at the moment, and it's just stuck at the top. So it's been stuck like this for weeks. And US dollar yen we know all about. So they are pushing up into ADR. We've broken that high of the second hourly drop from the intervention. Are we going to hold it? We'll have to wait and see. So either it is or it isn't. But this is a good spot to be selling because this is a load of selling. And one thing that does happen over and over again is when the market does something, it tends to do it again, especially if it does it in that sort of volume. So but yeah, Ryan, if you've got a system or a strategy that runs on that TPO, happy to look at it. I like indicators that use logic, and TPO is time and price is a good thing. Like market profile, volume profile, fantastic for showing you where the market's been. So if it has an edge in that respect, but the problem I always have with every indicator that everybody ever shows me is I always turn around. Very rarely I don't turn around and go, but that's just the same as X. So, some people come up to me and don't come up to me, but they say, I've found this fantastic indicator. It draws an arrow here. So I'll put it on the chart and I'll basically stick a load of indicators on and going, well, all that's doing is pointing down when that does this. Oh, so it's basically just a hidden RSI indicator. Or, why don't you use supply and demand? Because it's just resistance. Oh. It's all the same. Everything you find out there is the same. TPO will plot something on the chart which will correspond with something. A Fibonacci retracement or a pivot, or everything is showing you something similar. If I went short here, right? I've got a secret strategy, guys, and I come in here and I go, hey, guess what? I'm taking a short here, and I'm not going to tell you why. It's a secret strategy, and it flies down. Everyone will go, oh, wow, that was amazing. And then someone will go, you just used a 61.8 retracement on the fib. And I'll go, no, I didn't. I used a support resistance propulsion indicator. It just happened to coincide with a 61.8. Someone else will go, but that's where the supply and the demand indicator was painted. Someone else will go, hey, there was a TPO bulge there. The reason stuff moves from areas is because there is activity there. Hang on a minute. That's also a previous support turned resistance. There's 5 confluences of why something might drop from there. Pick one. I don't care. That's not going to make you money. What's going to make you money is if price drops after it gets to that price point. And if it doesn't, you deal with it. There's 1,000 reasons everything moves, but you can always find a reason for something in hindsight doing something. It doesn't make you money. It just doesn't. But I'm always interested in new strategies that have edges, because if I can turn it into a position trading strategy, because it's not as accurate as it needs to be to actually make money long term, that's brilliant. I use RSI because I've never found anything better. And support resistance and propulsion. You know, those are the things that tell me where the market's been. And all I'm doing is placing my bets on the market doing the same thing again. Risk management based on probable turning point. But you can't base risk management on a probable turning point. Risk management has nothing to do with a probable turning point. Risk management is to do where you place an order to exit the market with a loss. You don't know where the turning point is. You can't predict that. Yeah. This, right? So this here is a resistance bounce. Yeah. That is the resistance. That's the turning point. But the reason this dropped from here is because it's a resistance bounce on that level. It just overshot it. It came straight back down and did an A-shaped recovery because there was no liquidity up there. Yeah, it's what we call price discovery. Yeah, they tried to go up there and find out if there was an ability to trade up here. There wasn't, so they came back down again. Yeah, exactly the same as they did there. There was no one left up here to trade with, so they had to pull back. This time, there's a few more people available, but it wasn't. So where do you put your stop loss when price gets to this point? Your risk can't be based on a distance because the distance is an unknown. You can base it on a level that you've seen in the past. Everyone else is going to be looking at that level too. Oh, I know. Right. Well, I'll put it all up there. But they will stop moving when they run out of orders. But you are not an order. The banks have orders. You have a piece of poo at the bottom of a fly's backside on the bottom of someone's shoe. They don't even know you exist. You can't use risk in that way. You can, but it doesn't work, as I said. But, you know, Jazz, if you can find... I'm all ears, right? I've been in this game since 1996, hunting for the Holy Grail. The system or strategy that consistently makes money. Yeah. I haven't found it. I know hundreds of people that haven't found it. If you found it, please give it to me and I will test it to make sure it is what it is. Yeah. That's all I'll say. I can't be the only person in the planet that hasn't found it. Said before, I found VP, no nonsense, then me. You both pull the curtain back. Yeah. Yeah, VP's very much, you know, VP's all about making a strategy. The only thing I love about VP is he uses ATR. Yeah. He's hopefully getting everybody out of this ridiculous pip mentality that everybody else pushes you into. Yeah, you can't use that. So ATR, which I know he's a massive advocate of, eye-opener, massive eye-opener for a lot of people. What do you mean I can't use 10 pips on everything? You don't even think about it. You'll suddenly go, well, why on earth do I get stopped out on pound New Zealand and I never get stopped out on pound US dollar? And then you go and look at the ADR numbers for them and you go, well, the ADR on that is 202. So this moves 202 pips a day and this moves 61 pips a day. If you use 10 pip stop loss, yeah, you're going to get hit a lot on that and not very often on that. Yeah, it's 5% of the movement in the entire day on that. And it's about 20% or something, or not even that, 18% of the movement on that a day. Yeah. ATR will tell you that you need to use a percentage of the movement of that. ADR is what I use because I'm interested in how much it moves in a daily basis. But if you're trading on a low time frame, you need to look at the average true range of what that time frame is doing, which will be different on everything. But ATR on low time frames, anything lower than the 4-hour chart really, again, is useless. What is it telling you? What does ATR tell you? The average true range in the past. What's that got to do with that candlestick that's 4 times bigger than the average true range has been over the last 7 or 8 hours? Doesn't help you at all. Something that moves on average a certain amount over a period of 2 weeks will give you a rough idea of what sort of lot size and what sort of distances you would expect, unless the conditions change. When there's a news event that drives something 200% of its average daily range, you need to pay attention, because you can short it because it's unlikely to be able to maintain that velocity, or you can wait for a pullback and assume that the guys that made these two massive propulsion gaps are going to add to them in the future. Breakout, pullback. You use ADR how you see fit, but you have to use ADR. And that's one of the things that No Nonsense is great at. GP's got a great, for those that don't know what the hell I'm talking about, there's a YouTube channel called No Nonsense Trader. But all he will do is lead you down the garden path into creating a strategy using multiple indicators. Yeah. He won't teach you. He will teach you to put your stops in fairly decent places, and all of a sudden you'll become a bit more profitable, which is not a bad thing, is it? So, Neerav's on the prowl again. New seminar advert telling me how stupid I am. Yep. Neerav. He picked the wrong time to go into prop firms, didn't he? Oops. Risk management based on probable timing. Yeah. TPO bulge. I'm going to have to tell my girlfriend. Yeah. I'm going to look at it. I like the idea, but again, as I said, I don't think I'll find anything that's. You've got to have an edge. You know, my edge is that I don't get out because I'm wrong. There's not much better edge than that, is there? I do get out when I'm wrong. I have to. Aussie dollar Swiss ADR. US dollar Swiss. Oh my God, it's like, why? What was I saying? Figure out my brain. Yeah, I don't think I'll find anything that is unusual about TPO. It's just another way of looking. TPO is a little bit like a different variation on candlesticks. It's another way of looking at price, isn't it? Price and time together. Which, if you think about it, Renko and Heiken Ashi are similar in the fact that they look at time and price and they smooth it out. But I'm always ears for new stuff. It's not new, I've looked at it before, but only in futures. TPO is actually a charting pattern in futures, so it's probably come from there. A lot of the stuff you find that transitions from the futures market into Forex doesn't really work because the vast majority of it is based on volume, and there is no volume in Forex. It's all your broker. But TPO is not based on volume. So I like the 90 RSI strategy you talked about. Back tested it. Gold. Too bad. Doesn't happen often. Yep. Yeah. 90 RSI is but 100% strike rate. You know, if you want that strategy that never fails, it's there. Can't see that one. It's behind my head, but there's one here. That's a 90 RSI. That's a 90 RSI. That's a 90 RSI. That's a 90 RSI, and that's a 90 RSI. But look at the difference. Again, this is going back to exactly what I was saying earlier. Yeah, they're all 90 RSI extensions. What do they have in common? Entry condition. What don't they have in common? Distance the market moved after. Yeah, so that one moved that far. 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 Not one of those is the same. The next 90 RSI that we get, which will occur here or here, yeah, how far is it going to go? So in your back testing, it will tell you that if you targeted for ADR, no, 3 ADR, you have a 100% strike rate. with 3 ADR. Before that date, your backtesting would have told you you'd have had 100% strike rate with 343 pips, which is actually, no, it's not, because that one's smaller. 250. So that is 5 ADR. So after this date, if you included all that time, your 100% strike rate is 3 ADR. Before that date, your 100% strike rate is 5 ADR. Yeah. The difference in what your strategy should use in the future is determined by that line. When we hit this, how far is it going to move? If it moves 1.5 ADR, all of that backtest is utterly useless. Any difference, is it? Because if the next time we hit that 90 level, it just does that and then careers off in that direction, your backtest of 3 ADR, which is the minimum we've ever gone back, is not the minimum anymore. Which is why all of this is utterly useless to you. It gives you an idea. But when that happens there, and my target is here and it doesn't get hit, and it pushes that way, I personally will be adapting to that condition in the market and readjusting and doing a new thing, which is not targeting 3 ADR. It's scaling into a losing trade and exiting it. Because now the strike rate, which was 1, 2, 3, 4, 5 trades at 100%, is now 6 trades with 1 loser. The strike rate has suddenly dropped down to 85% or whatever it is. Because of backtesting done over different time periods. So at the moment, the 90 is fantastic. But the 90 only tells you the condition is stretched and you will get something. What you get, this is why I keep saying, doesn't matter why you get in. That's what makes the money when you get out. If you let this thing go down 5 ADR because you want 7 ADR out of it, then it screams against you and blows your account. There's nothing wrong with the strategy. It worked. You didn't take the money when they gave it to you. When do you take the money? You don't know. How can you know? Because you don't know when they're going to go the other way, do you? But 90 is fantastic. 4-hour 90 RSI. Go and back test it with the position trading EA on the market reverse alerts EA on all instruments. Phenomenal. But like I said, you'll get 4 or 5 trades a year if you're lucky. We just had one. We had one there as well. Whoops. Wow. But what's going to happen next? Clap, bang, bang, bang. Is it? Or is it? I don't know. But it worked there. But you wouldn't have got in. This is the other thing you've got to bear in mind as well. You wouldn't have got into that. Because that happened way too fast. You didn't even have an entry. It happens in 10 minutes. There's no signal. There was no signal indicator on the planet that told you to get in there. There was no moving average cross. By the time it crossed the moving average, it was there. It done 600 ADR. Can't use it. Useless. Condition was right. Yeah, the condition was right there at 85. It just took 3 weeks. Don't know what's going to happen, do we? Nico. Yeah, Franco Nico. I would say brilliant. I've just been looking at these stupid candles for years. Got to have a sense of humor or you'll go nuts. Yeah. Good old Nero. If you want to laugh, go and watch his stuff. But you're going to have to pay $2,500 for it. So it's probably not funny, is it? Better off sticking that in an account right now and pressing the sell button on the US dollar yen. You've got as much chance of making money as watching his course as you have of the yen dropping. In fact, you've got more chance, I think, of the US dollar yen dropping than you have of got making money out of his course. Make your own mind up. Right, I'll leave it there today. I'll be back tomorrow, as usual. Tomorrow we've got a morning session because no, we haven't. We've got an afternoon session tomorrow because it's PMIs. So it's the 1st of May tomorrow as well. So tomorrow we've got PMI figures coming out. This evening, obviously, bear in mind if you're in any New Zealand dollar positions, we've got the New Zealand unemployment rate. I am praying for a massive spike in the New Zealand dollar because I'm short Aussie New Zealand. If I'm wrong, I will be exiting probably. I don't know, actually, I'll need to decide whether I'm going to get out of all of it or portion. But that unemployment rate has got the opportunity to drive that New Zealand dollar dramatically. So be aware of that. We've got ore speaking as well. So there could be forward guidance given on what they're going to do with interest rates moving forward. So we have got that as well coming up overnight. Euro bank holiday tomorrow. So do not trade the DAX. And I'm on tomorrow afternoon. So non-farm employment is out before I'm on. I'm going to come on for the PMIs. So that tends to be a blip a lot of the time. The PMIs quite often will move it further. So I'll be watching that. And obviously tomorrow it's FOMC. So big potential moves tomorrow afternoon, or rather evening. We've got Macklem speaking tomorrow evening as well. Just really realised as well. So there could be some CAD movement tomorrow night too. All right, so have a good day. Anything else you need, I'll be in Telegram or Discord. I'll be watching what happens with these ADR reversals, of which there are plenty today. Really stretched opportunities on these Aussies and New Zealands. So good opportunities for shorts. Don't get too greedy on them, but yeah, looking good. Nice extensions on a lot of this stuff at the moment. So opportunities galore. All right, so have a good day. Anything else you need, let me know. Otherwise, I'll be back tomorrow. Have a good one.